The other big story of the day is that crude oil prices are going above $75, and of course there is a OPEC meet which lines up ahead. But there are big earnings upgrade which are pouring in for ONGC. In fact, ONGC in their con call did also mention that the next gas price revision could be 50 to 60% higher. There's a major rally which has happened not only in oil but natural gas prices as well. All of that is leading to global brokerages upgrading the earning estimates. We have somebody now who understands the financial dynamics of ONGC very well because he has sat in the chair of being the management of ONGC before. We're talking about Mr. R.S. Sharma. We recently spoke to him about government's plan of partially monetizing some of its non-core fields of ONGC. Today, we're talking about earnings estimates. Mr. Sharma, what are you making of the impending gas revision which lies ahead? Could it be very steep? And how would it be absorbed by the industry in your thoughts on, and also the way oil and gas prices in the last 1 year have rallied? Do you think it could materially add to ONGC's earnings going forward?
I would say this gas revenue does not add very substantially to the revenue base of the company. But as of now, the gas price 1.79, the consumer is virtually getting it free. So it cannot continue for eternity. ONGC has been incurring losses on the gas business. So I don't have calculations because this 6-monthly adjustment that happens from 1st of October, I also read the statement from ONGC management that the next revision, they are going to have substantial increase. What substantial increase? Yet to be seen. And it is only an estimate as of now. But surely it will add to the bottom line of the company, and I don't think this will cause any hardship to the consumer, because as it is, the current prices are so low. You cannot, consumer cannot keep expecting getting the gas price so free when the country is importing more than 50% of the gas. Right now, our imports are about 55% and have been going up. So domestic production has to keep pace with the imported the price. Like crude oil. Crude oil, the domestic production gets import parity price. So why not gas? So as it is, the formulation for the gas price is highly skewed against the domestic producer. So whatever adjustment happens, this will be good to ONGC, and it will not be much of a pinch to the consumer.
Right. Mr. Sharma, now you can speak about, certain areas which probably was not suitable when you were as the CMD of ONGC. I want your independent thought, and so many global brokerages and financial institutions do talk to you about the oil and gas sector valuation, etc. I just wanted to understand the operations of ONGC, the way its assets are, and the way environment have become conducive lately, however short-lived it might be, but at least oil and gas prices have come back. Do you find ONGC deeply undervalued? One section of the market believes that it is deeply undervalued. The other section of the market believes that that undervaluation is because of certain reasons. What are your thoughts there?
I feel not only that slightly undervalued, it is highly undervalued, because the investor or those who are new to that into that ONGC stock, they may not be aware the intrinsic strength of ONGC. In fact, ONGC is one unique company in the world which is also horizontally integrated. The entire range of oil field services are in-house, and only outsourcing is done when in-house resources are not adequate. So that takes away, volatility in the business prices, like the current gas prices. They are highly non-remunerative. And oil prices have also gone down less than $30 a barrel. ONGC has sustained, survived, and continued to be strong. So in the long run, ONGC, I would feel that for any investor is going to be a very good catch. And ONGC will continue to reward the investors And overall, the strength of ONGC, its knowledge base, its research institutes, experienced manpower. So everything adds to a lot of strength to ONGC.
Right. And lastly, Mr. Sharma, your opinion matters a lot in oil and gas. Lately, we've seen first of all, when or Aramco was filing for its IPO, there was a lot of talk of Aramco's dreams of going towards the green energy side. Originally, and even now, bulk of its earnings come from fossil fuel. And now another big, very large oil refiner, which has interests in gas exploration as well, but largely a petrochemical company, is talking about going in futuristic, fuel and solar voltaic and green energy, all of that. How are you observing this transition? And if companies, such large companies, speedily start moving in that direction, what will happen to crude oil on a more structural basis, in your view?
Well, based on I can tell you very comfortably, my at least last 30 years of experience in the industry, fossil fuels are not going to go away. The coal is going to remain a dominant energy source for India, at least till 50s and 60s, say for another 30 years. Likewise, crude oil is continue to today we are importing 85% of our requirements. And this renewables, today you know how much is the total, the basket renewables provide to the energy basket. This is 7 to 8%, not more than that. So coal 55%, oil 30%, gas another 6-7%. So, and the way the energy demand has been growing up, the way the economy is growing, and we know that energy is the prime mover for the economy, the energy demands, the way it is growing, the incremental growth itself cannot be sustained by the renewable sources. So fossil fuel share is, I'm afraid, it is going to increase further. But I am not denouncing, I am not undermining the role of renewables. In times to come, maybe in decades to come, in 5 decades later, it may be a significant source. Hydrogen fuel can be a very significant source. But for the foreseeable future, I'm saying 20, 30 years minimum, this crude oil, coal are going to remain very, very much in force. The country, look at it, the West Coast, 60 million ton refinery getting set up. So the policymakers also know it. So instead of being import dependent in these things for the growing energy needs, it's very significant to have your own contribution to the production, to the refining sector and everything. So this oil and petroleum products are not going to go away for at least 30, 40 years, I can say with certainty. So the ONGC per se will not have any demand constraint for its production, oil as well as gas, for at least, again, for 30, 40 years at least. So that is surely not a concern. And since I have been seeing ONGC, the core strength, which perhaps those, the media people who have just come to the scene, they do not know what is the core strength. So that sort of criticism comes from there. But all senior journalists, all those who have been in the industry for a long time, those who know the industry well, everybody feels ONGC is being taken for granted. The kind of contribution ONGC has been making to the country's economy, it is unparalleled. So you can't discount ONGC, but the fact is ONGC's liquidity has been taken away. Whether GSPC, HPCL, and now, some of the discovered fields not being monetized because ONGC has been concentrating on the larger fields. It's not any dearth of know-how. The kind of incentives being given for the auction of these small fields to the new players. Why not let these incentives be given to ONGC, and you will find that ONGC can also monetize them quickly. In any case, for them to evacuate their products, they will need infrastructure support from ONGC. So ONGC's value in the entire value chain cannot be undermined. ONGC will continue to play a very, very dominant role for at least foreseeable future. At least I can say surely till my lifetime, at least for 20 years, I can say with surety, but it's surely going to be longer.